All right, welcome to the April monthly market report. I'm David Childers, your host, and I'm excited to talk about what's happening in the market. There's a little bit going on. Certainly, the war in Iran and everything happening has sort of caused some disruption in mortgage rates. We'll talk about that. We're going to talk about what sellers are doing right now, and we're going to talk about prices, everything you need to know to be the expert to the clients you serve. All right, let's go ahead and jump right in. Rates are volatile, but still affordability has improved. That is true right now. I think a lot of us were surprised to see rates move up. Certainly nobody, I don't think, wants to see war continue on. It's had an impact on the housing market. Mark Fleming with First American came out and said this. He said, geopolitical developments can certainly create short-term volatility. And yes, we have seen that. Energy prices spike can briefly push yields and mortgage rates higher as investors hedge against the risk of near-term inflation. Listen, this is a time right now where, if you were on our previous updates the last couple of months, we've talked about, forecasts for mortgage rates. We certainly bumped up from that. And many people wondering, okay, what does that mean? What does it mean to the folks that I serve? What does it mean to those that I'm working with? And more importantly, what's ahead for the future? This is a time where I always think about this: perfect advice versus expert advice. Nobody can give you perfect advice ever in your life. If you think about maybe going to the doctor, or going to maybe even an attorney, what they're going to say is here's what we see. If you sat down with a doctor, they'd put you through a battery of tests. They'd say, here's what we see. Here's what we're going to now prescribe. Come back and see us in 30, 60 days. And then we're going to put you through another battery of tests. And here's what we see. That is their expert opinion. It's not perfect. It's not what, they know everything. And that's our job right now, is to give our expert advice given all of this, right? So you see mortgage rates sort of bouncing around the sixes, and we got this volatility you see right here from Freddie Mac, their weekly monitor. They shoot up to about 6.5, bouncing around there right now. Here's a couple of things that I will tell you that I know to be true. One, markets are forward-looking. They like certainty, right? And so they want to see all of this in. They want certainty to be a part of it. There's uncertainty with the oil prices and inflation and all of those things. They want to see uncertainty, but they're forward-looking. So be looking out for signs that we're seeing something different happen with mortgage rates and what's going to happen there. Investopedia said mortgage rates don't move in isolation when global events inject uncertainty in the financial markets. And as long as uncertainty remains elevated, rate swings may continue to happen. Let's hope that this all gets certain. I believe it will as we move forward in everything going on in the world. And let's hope for that. But the bottom line is we need to be able to explain this. Let me show you just how here in April this has affected things. If you were to go back to January of last year, borrow $500,000, just a good round number to use, 7.25 roughly, that principal and interest payment, $3,414. You see it right there on the screen. April, 6.45, same amount borrowed, $3,144. That's a savings of $270. Well, where we were just a few weeks ago, 5.99, sort of the best rate environment we've seen, 29.95, a savings of $419. Why am I telling you all this? The reality is, over the last year, payments have still improved by almost $300 on $500,000 borrowed. Now, most people are, even when we were at 5.99, said, we'll wait till they go a little bit lower. Right. And waiting, different things can happen. I think it's more about the best advice we can give somebody right now. It's not timing the market. It's always timing the market with real estate. And many people wondering, well, should I buy now? Rates are too high. What are we going to do? This is a way we can bring clarity to those. And listen, rates start to come back down again. I believe it'll bring more activity in the market. There is opportunity right now to get in and to do that. Matthew Graham from Mortgage News Daily said this: even if the war were to end today, there's been sufficient disruption to infrastructure and big enough initial spikes in energy prices to create what economists would refer to as second round effects. In simpler terms, this means that inflation expectations and interest rate will not immediately return to February's level simply because the war is over. Okay, so nobody going, hey, we're going to snap our fingers and we're going to be back to where we are. But I think that's important advice to listen to as we get as we look forward. ICE, which is Intercontinental Exchange, they do all the mortgage back end processing. They said this is true. Every major market has seen payments improve year over year, with the largest reductions in markets where prices have pulled back from most recent highs. Okay. So that is true. We still are in a better affordability environment, not as good as we were a few weeks ago. The other thing that bodes well for affordability, this will be the second year in a row that incomes are rising faster than home prices. See the green bar there higher than the blue bar, which is home price change, or the rate of appreciation of home prices. Incomes improving faster than the rate of home price appreciation. We need more of that to bring things back into balance. Mark Fleming said, ultimately, affordability is determined by the interplay between rates, home prices, and incomes. We've talked about that a lot, and how those forces evolve across local markets. Listen, being the expert on affordability and what payments are and what's happening there does not require a crystal ball. Nobody has it. Even experts in the mortgage environment do not know what's going to happen. Keep that in mind. Remember that. Okay, so you don't have to come with some sort of prognostication on what's going to happen. But what you do need to do is help people understand what's going on. Have a great lender partner they can talk to about the financing of their home. The other thing that's happening, we're right here in the middle of spring. Hopefully where you're at, you feel that, but seller activity is picking up, and it's done so just in time. We need more sellers coming into the market. We know that, and we need more folks. More activity. We want to see that. A lot of people saying we're not going to move, we're not going to do anything, but we are seeing sellers move in. Inman said, despite recent global and economic volatility, the spring market is showing signs of positive momentum. That is certainly a good thing. Jake at Realtor.com said new listings jumped up 21% in February, a larger than typical seasonal surge, and rose over 0.7% year over year. March typically sees the biggest month-over-month jump in new listings of the entire buying season, averaging an 18% increase since 2017. This year has exceeded 20%. Listen, we want to see more people bring their home to market. If you were to graph this out, this is what this looks like as new listings, or fresh listings as they call it here, come to market. Maybe this slow, gradual trickle up. And again, there's two things about this. One, I don't think I'm probably saying something to folks that are listening today that would say, well, David, I already knew that. This is a great way to show people, whether you're buying, whether you're selling, what is happening with new inventory coming to market. The second thing that is for sure true about this is it isn't the same across the country. The Northeast and the Midwest down in new listings from March last year to March this year. The South and West up. Remember, we've talked about that a lot. Certainly the southern region of the country, the western region of the country, is seeing more inventory in their markets than what we've seen in the middle of the country, and certainly in the Northeast, down still there. If you look at this is a great look at a map, February of 26 over March of 26 this year, month over month, where listings are growing the most. You can look at where you're at, your state, and see what's going on there. So folks deciding, hey, we're going to put the home on the market, doing so at a faster pace than what they've done in the last several years. That is a good thing for buyers out in the market. We want to see more people put their homes on the market. Buyers have more opportunity and moving on with their search. Redfin said not all sellers are willing to negotiate. Many opted to delist and try again later instead of cutting their price, especially if moving wasn't urgent or if they needed to get a certain price break even after buying at the peak of the pandemic market. Delistings had a record high of 112,788 in December 2025. Now, if you graph that, this is what this looks like. This is delistings going all the way back to 2021. Number of people that said, we were going to sell it. Nope, we're going to pull it off. We're not going to do it. And I think that has to do in a lot of ways with folks that are disconnected from the market, folks that are saying, hey, we were going to sell it, but maybe they had a price issue, whatever it was. They didn't get to the dream of selling it, and they said, we're going to pull the house off the market. Now, listen, this is where it gets interesting. Nearly 45,000 homes that were delisted last year, let's talk about 2026, were relisted in January. the highest January figure in records dating back to 2016. So more homes coming back to the market than we've seen since 2016. That's an interesting fact right there. If you're selling, you want to know that. You want to know what your competition is doing. They took the home off the market and they're saying, hey, we're going to put it back on the market. This is what this looks like going back the last 10 years. Right? More people putting their homes back on the market this year than we've seen in the last 10 years. The other true point, and I think this is important to remember and keep in mind, buyer activity is slowly increasing. Okay, so this is monthly pending going all the way back. I believe that's to 2023. And sort of the slow tick up forward. We're not going to get out of this hole of less transactions overnight, but slowly getting out of it. More people putting their home on the market, buyers coming back into the market. Now, I think the expert agent, your expert advice is to say, here's what's happening nationally, but let me tell you what's going on right here where we're at in our market and being the expert in that. Misha Fisher from Zillow said buyers have more homes within reach to choose from to go along with friendlier conditions. Lower mortgage rates will also encourage more homeowners who have felt locked in to sell, as they will be able to find a better afford their next home. I think that's going to be true. I think as we get through this conflict, I do believe mortgage rates are going to come down. You're going to see more people jump into the market. You are going to see a lot of forecasts revised, though. This is a hiccup, certainly, that nobody saw coming in the 2026 real estate market. Zillow's latest data suggests buyers and sellers are starting to regain confidence. That's a good thing. Existing home sales rose from a year ago, providing an early glimmer of hope that the housing market has turned a corner after 3 years of bouncing along the bottom. 2024 and 2025 will go down as the slowest years in transaction count when adjusted for population. It's going to be a situation where, if you take a look at the number of homes sold, you then look at the population number in this country, the absorption rate is tremendously low. We want to see us come out of that as well. Last part that I'll give you here is home prices. This is an interesting look. They aren't crashing, but growth certainly is flat. And we have markets that are up, markets that are down, markets that are flat. Probably one of the most, relative to home prices, one of the most bifurcated real estate markets of our lifetime, for sure. Lawrence Yun said, while most metro markets continue to see record high housing wealth, some areas are experiencing home price declines. That certainly is true. These declining markets are concentrated primarily in Florida and in Texas, where robust supply and recent construction are increasing competition among sellers to attract buyers. It certainly is true. We're seeing that across the country. Here's a very interesting look that our team pulled from NAR. These are markets by region, the Northeast, the Midwest, the South, the West. You see each one of them there. February of 25 in the blue there, February of 26, each region up except for the West. You see it there, the far right, in median existing sale price. Something to pay attention to, right? If you're out West, then you know that, and you can certainly inform people about that in the market that you're in, and we want to keep people up to speed on that. Home price growth is slowing, but the impact of price hikes over the past several years continues to affect affordability for many prospective buyers. Overpriced homes can linger longer on the market, diminishing seller power. I think pricing probably last year in 2026 will be one of the biggest things that we think about, as a defining part of the real estate market. Folks that had their home overpriced versus having their home priced right for the market. Now look at this. This is a very interesting graphic that I'm going to show you. If you want to take a picture of one and post it on social media today, or you grab these slides and do that. But look at this right here. Going back all the way to 2012, I want to maybe talk through this for just a second. The green is homes that sold below list price. The gray in the middle is sold at list price, and the sort of orangish colors sold above list price. So if you go back to like a defining kind of bar here is 2021. Try to put my cursor over it right here. 2021 right there, where you saw a lot of homes selling above list price. The green there, fewer sold below list price. Now, fast forward to today, that green bar has gotten a lot bigger, right? And you know that. You know that. It's hard to communicate some of these things sometimes to a particular buyer or seller, but show them this. Have this in your listing presentation to say, hey, look, back then, this is what was going on in 2020 and 2021. Here's the reality of today. Pricing is extremely important. We want to keep that in mind for folks that are wondering about this. Realtor.com said this marks the 22nd consecutive week of flat or negative price growth year over year. Asking prices are falling meaningfully, which is welcome news to buyers. This is also evidenced by a year-over-year price per square foot metric, which fell to negative 2.5%, a rate slightly lower than the negative 2.6% the previous week. The per square foot figure suggests an underlying drop in home prices is taking place, not just a mix of smaller homes coming on the market. So listen, a lot happening with home prices right now. A lot is going on. According to researchers, when a large percentage of homeowners hold mortgages well below the current rates, they are understandably hesitant to list their homes, leading to chronically low inventory levels. Tight inventory keeps prices high despite softening demand. That's the real reason. People wondering, okay, is this market going to crash? Is something going to happen here? No, people they don't have a need to sell their home, right? Whenever that is true, that is going to keep upward pressure on prices, and that's a good thing for real estate if we think about it. And even as inventory is growing, look at this. This is a fascinating statistic. In 21 and 22, the circle on the right, new listings, new inventory brought to market accounted for 85 to 90% of active listings. In January of this year, the number is 36%. It's fallen dramatically, right? So inventory is growing, but it's because people's homes are staying on the market longer, not because everybody is putting their home on the market. That's an important point when it comes to price to be able to explain, right? It's not everybody's jumping in going, hey, we got to sell our house. No, it's quite the opposite. Most folks are like, we don't have a need to sell our house, and so we don't have to worry about that. And the bottom line is here, this is very well said. I always want to maybe help you understand this and keep this in mind. America has a chronic housing shortage. When mortgage rates dropped to record lows during the pandemic, buyers took advantage of those lower costs and brought up a large share of available homes. This depleted supply and pushed prices to record highs. The effect of this continues to linger and will continue to linger. Today, inventory is slowly improving, but the volatile and expensive economy is keeping substantial growth at bay. Listen, we had a housing shortage coming into the COVID era. We know when mortgage rates fell, everybody jumped in. We know what happened there. But at the end of the day, most experts would say we're somewhere between 2 and 3 million units undersupplied here in the U.S. market, with everything happening. And that will take a while to recover from, but that will keep upward pressure on prices for quite some time. Listen, we do all of this for this reason right here. We know most agents know what's happening. Good agents understand what's happening, but only great agents can explain what's happening. My hope is the last few minutes, you can use all of this to explain exactly what's happening in the market. Listen, it's my honor to be able to do the monthly market report each month to give you everything you need to know happening in this market so that you can be the expert. Now, here's my coaching. Take this information, compare it to what's happening in your local market so that you can get it in the hands of people buying, selling, thinking about doing either one of those so they can make a powerful and confident decision.